Good morning, everyone. We're going to wait a couple of minutes for everyone to join, and then we'll get started. If you popped in earlier this morning, we apologize for the technical delay, issue. We had some invites go out for 10 o'clock Eastern time, and we were not prepared because we are standard time. So we want to make sure that it was all Central Standard Time. So we'll wait until about 10:02 and then we'll get started. Okay, let's start getting started. Good morning, everyone. Welcome to Optimum Read Life Insurance Presentation Claims CSI Fraud Detection Part 3. Today we're going to, I'm Jill Thompson, by the way. I'm the AVP of Underwriting, and I am going to be Michelle McAllister's Vanna for her today. And our presentation is brought to you today by Michelle McAllister. She is currently the manager in our claims department. Her current designations are FMLI, FLHC, AALU, and ARA. Michelle started her career in the insurance industry as a claims examiner at a direct writer company 16 years ago. And just 13 years ago, just shy of 13 years ago, Michelle joined Optimum Re as an intermediate claims analyst and now serves as the claims manager. Michelle attended the University of Las Vegas and now lives here in Dallas with her family. Fun fact, she is a paint by numbers Picasso, and she currently has her artwork displayed over in the claims department. Um, Before we get started, I do want to make sure that if you have any questions, please put them in the Q&A section, not the comments, or raise your hand. Just use the Q&A. And then Michelle's got two separate spots that she's going to answer questions. One is partway through, right before her case clinics, and then the one at the end. We'll pause and ask for questions there. And then at the end, I'll ask you about a survey. But take it away, Michelle.
All right, thank you, Jill. And good morning to everyone. And thank you for joining me and my favorite co-host, my favorite Vanna White, Jill, for part 3 of our Claims CSI Fraud series, Unmasking the Deception from Red Flags to Action. So there's an enormous amount of information that we can use to learn and share about fraud detection and prevention. So we're back for our third round to delve a bit deeper into a couple of more different types of fraud that we encounter in life insurance. So let's get started with our agenda. So on today's agenda, we are going to go look at some statistics. We're going to review some that we've talked about before. We're going to get updated on some new statistics regarding fraud in life insurance and how much it costs all of us. We're going to go over 2 different types of fraud schemes, beneficiary changes and marketer fraud. We're going to talk about the red flags of those fraud schemes and some strategic actions we can take for preventing. And then we're going to go through a few case studies, popular case studies, and then we'll go through a conclusion and some takeaways. All righty, so let's get started with a quick review of what is fraud. So fraud is deceit or trickery, and it is specifically an intentional perversion of the truth in order to induce another to part with something of value or to surrender a legal right. It is also an act of deceiving and misrepresenting. So in life insurance, all of these terms in this definition sound really familiar to us. Okay. So fraud detection for us in the life insurance and insurance period equals your risk management. At every stage of the life insurance process, we play a role in protecting our company from potential fraud. From the initial application all the way through to the final claim payment, every team member has an opportunity to act as a human fraud detector. Risk management is a daily responsibility. For claims examiners, our part in risk management takes place in identifying and preventing fraudulent activity before our company admits and pays liability on a claim. So here's some more statistics in review. Fraud cost the American consumer approximately 308 billion, that is billion with a B, $308.6 billion every year. That statistic was put together in 2021 by the Coalition Against Fraud. Now here's some updated statistics. I read an article in the Forbes Advisor on NASDAQ.com, and it rated the top 3 insurance categories in annual cost of fraud. So number 1 is health insurance fraud. Total, approximately $105 billion per year. A little bit over half of that is from Medicare and Medicaid fraud alone. Number 2, life insurance fraud. It comes in at $74.7 billion. And number 3 is property and casualty with $7.4 billion due to auto theft fraud and $35.1 billion in auto premium leakage. Now, auto premium leakage, that was new to me. Auto premium leakage is when people misrepresent the facts about themselves in order to get a smaller or less premium amount. And again, this information came from Forbes Advisor on NASDAQ.com. So what are the side effects of this fraud and all of this money that it's costing the consumers and the businesses? Well, for the insurance carriers, there are a number of side effects, and they all cause us to look like this lady on the slide here. First thing is increased claims and operating costs. So fraudulent claims drive up overall claim payouts, which drives up the overall operating costs. And to offset those losses, insurance companies will first raise premiums, and that has a direct impact on their policyholders. Second, there is an extra burden on the company's resources because they're spending time and money on investigating fraud rather than paying out and looking at legitimate claims. There's damage to the carrier's reputation. High fraud rates or poor fraud controls can damage a company's credibility and customer trust. And then also there could be regulatory consequences. Insurers that fail to detect or prevent fraud can face fines, scrutiny by departments of insurances, and other compliance issues. So how does it affect the consumer? Well, we all probably know a little bit about that, how it affects us. So first thing is the higher premiums that we pay. For insurance, the insurance premiums that we pay across the board, for whether it be for health insurance, your car insurance, your homeowner's insurance, your life insurance, across the board, consumers pay approximately $900 in increased annual premiums every year. I know I like to keep my extra $900 to do other things with than paying for fraud because I don't submit fraudulent claims. Also, there's a delay in claims processing because of the increased scrutiny that examiners have to spend looking and to detect fraudulent claims, and it slows down the process of processing the legitimate claims. We have also reduced benefits. So in response to fraud risk, insurers will often tighten underwriting standards or reduce the policy features. And then, of course, if you participate in the fraud, there can be criminal charges. You can face fines, jail time, and a permanent criminal record. All right, so we're going to go over some fraud schemes, the two I mentioned. So we have fraudulent beneficiary changes and marketer fraud. Now, when you use the word marketer fraud here, we're referring to a broad category of agents, producers, uh, the, excuse me, I'm sorry, agents, producers, the agencies, the whole kit and caboodle. So when we're talking about marketer, we're talking about anybody who is into selling life insurance products. Okay, so on fraudulent beneficiary changes, what type of fraud do we see here? So we see forged documents or forged signatures, or people impersonating a policyholder. Uh, People forge the documents or impersonate the policy owner in order to obtain a beneficiary change request form, and change the beneficiary without the policyholder's knowledge or their consent. There's undue influence, and this one is the most tragic of all. This is usually perpetrated on the elderly or mentally impaired folks, in order to force the policyholder to change the beneficiary. Sometimes this is done under severe duress. Falsifying legal documents, such as power of attorneys or trust documents. They use these fake or altered documents to give themselves authorization to make changes to the policy owner and the beneficiary. Um, Digital identity theft. Um, we're all getting really familiar with this, which is the unauthorized use of personal information to gain access to an online insurance account, or perhaps just flat hacking into the online account and making changes to the beneficiary without the policy holder knowing that it even happened. Then we have backdating or tampering with change forms. And this is an older style of beneficiary fraud. And this is where they take documents like you submit a copy of a beneficiary change form, and perhaps the carrier will send you back a stamped copy that it's been accepted and on this date. And people usually keep that kind of thing in a file somewhere. So people in their house or in their home or maybe going through their trash will find that document, alter the date of the document, and resubmit it with a change, and change the beneficiary to their name or whomever name they want to. So haven't seen very much of that, but it does occur. So how do we detect these things? All right, so there are many ways to detect these things. And while none of these flags are always fraud, they should be looked at closely and taken into consideration before the change in beneficiary is accepted. So first thing is, when you're looking at the signature on the change of beneficiary form, sometimes it doesn't match previously signed forms. You'll pull up the application, or perhaps they did an policy increase or some other form that needed to be signed, and the signatures don't match. Shaky signatures, that looks like, maybe the person wasn't in good health when they signed it or something like that, or misspelled names could indicate illness, duress, or diminished mental capacity. So you have to be careful with those. A request for a change of password or usernames for an online account right before beneficiary change is done. Um, Odd phone calls with policyholders to obtain change request forms. Now, what I mean by an odd phone call, sometimes we get phone calls and we look up the person's name, and the person on the phone sounds really young. We look up the person in our system and we see that this person is 82 years old, but it really sounds like I'm talking to about someone in their late 20s, early 30s, someone fairly young. You never know. But you want to take note of that kind of thing and ask questions. Is this the policy owner? Are you a representative of the policy owner? And see what you can find out. I've said this before in my fraud webinars, and I'll say it again. If you let people talk, they tend to tell on themselves. So sometimes just letting people talk on a phone call, listening to what they have to say, you might find out more information than they had planned to reveal to you. Other red flags are legal documents without notarized signatures. Legal documents usually come with some type of notarized signature to verify that the correct people have signed this and put this in place. Um, more than one person's handwriting on a change request form. I have in my past life seen a request form with look like 4 different handwritings on there. I was kind of curious what was going on there. That's something that you want to, take a deeper look into. Just, look at it, make sure everything is okay. Um, the beneficiary is changed just days before the death. Now, this is very common in the industry. We'll see a beneficiary change within weeks or days of the death of a person, or we may see more than one beneficiary change within days or weeks of the insured's death. Um, and then a previous beneficiary or the one who it was changed from with the beneficiary change, or other family members are unaware of the beneficiary changes. Normally, family gets pretty close to dying folks at the time, and if you make a quick beneficiary change, someone in the family usually knows about that or would know who it was changed to. So, um, get a phone call from a family member and, they think that they're the beneficiary and they suddenly find out that they're not, could be a problem there, something you may want to investigate. Okay, so what are some action steps that we can take if we happen to see one of these red flags? Okay, so we can compare signatures with previous submitted documents. And if you don't like it, perhaps you could ask for a notarized copy of a beneficiary change request form. I know most companies don't do that. I don't think I've seen maybe one company that does that. But it's not illegal to ask for it, just to make sure that whoever's signing is who they say they are. Um, as far as online changes and hacking into online accounts, you can track IP addresses to see when that password change was made or the username was made or just the beneficiary was changed. Does the IP address match where the insured lives? Um, checking that login data, see if there was any changes made to detect anything suspicious that may be going on online. You can use your IT department for that. Consult with your company's legal advisors on legal documents such as a power of attorney. Make sure that that power of attorney is in order, does in fact give the person that's signing the beneficiary change form the power to do so. Some power of attorneys are limited. Some trust documents do this, and you have to be careful. So use your legal advice or your legal department to help you with that. These beneficiary changes tend to go to the customer service agents, things like that. And most times they're not a paralegal or a lawyer, and they don't know exactly what they're reading. I even as a claims examiner, I don't know all the legalese, and I wouldn't know if this document was authentic or not, if these words are the right words, are they in the right place. So your legal advisors would know that kind of thing. Definitely want to take it, use them and leverage that in order to make sure the beneficiary change is in order. Um, Also, sometimes, and this may be difficult to do and difficult to um, rationalize with your client when you want to do this, but you may want to request medical information if you're suspicious about the policyholder's physical state or their mental capacity. Again, when you're on the phone and someone is requesting these changes or requesting these forms, maybe it doesn't sound like it's the insured on the phone. Again, it's a young sounding person, and I have an older policyholder here, and they say that they're the policyholder, or they'll say, yes, I'm the representative, but she can't talk right now. Well, why can't she talk? Um, and why can't she get on the phone with me? Does she understand what this is going to do, this beneficiary change is doing? You want to be sure to protect your client. You want to be their advocate as well. We want to process these things as quickly as possible, but we do want to step back and make sure that we're helping our clients as well as taking care of the company. We are risk managers. Okay. Again, here we request notarized signatures on change request documents. It's not anything illegal to do, I don't believe. And it may be an extra step, but it gives you that peace of mind knowing that this change, at least an extra added layer of protection, that this is the right person signing the document and this is what they want. Um, and then also you want to train your change request processors, whether they be your customer service department or your policy processing or whomever does it. A lot of times I think it's a good idea to get those people together with the claims analyst when they're, processing some of the beneficiary change, because the claims examiner, we are trained to take a deeper look at things, make sure things are in order. We don't like documents that look funny, quote unquote, to us. So, but train your change request processors that there is fraudulent. Make them aware of the red flags, the things to be looking for. Make them aware of the steps that they can take, some quick, some that may take a little longer, and when it's okay for them to take those extra steps in order to prevent the fraudulent change of beneficiary. Okay, so we'll move on to our next um, type of fraud, and it's marketer fraud. And again, this includes a broad spectrum of persons. So this includes brokers, agents, advisors, producers that meet with prospective clients and offer different life insurance options and coverages. And that comes from Spark Hire, which is a hiring website. Um, Getting into this area, I want everyone to know that it is not the case that all, or even most, life insurance agents or brokers are crooks. It's just, there's always a bad apple in a bunch. And there are just some cases that we wanted to go through, some things we want to talk about where we've seen bad acting agents or brokers or producers. But by no means does this mean that every agent, or like I said, even most of them, are bad actors. They're simply doing their job and wanting to service their clients. Okay, so some common types of marketer fraud. First, we have premium diversion, where or theft, where the producers fail to forward collected premiums to the carrier. This can result in lapsed policies, and it can ruin the company's reputation with the clients. There's credit and debit card fraud. Sometimes producers will unauthorized use of an applicant's credit card or debit card or bank information to purchase other policies to increase their commissions. This causes lack of confidence in the carrier, again, because customers get upset when there's extra charges on their credit card that they didn't know about. Churning and twisting. Um, I like this term twisting. I had never heard that before. I just heard churning. Producers convince clients to cancel their existing policy and buy a new one so that they can get the new commissions. This is bad for retention, the company's retention. This is bad for the customer, of course, because it usually costs them more money in the long run when this happens. And it also creates a contestable claim sometimes, where a contestable claim wouldn't have been an issue. And most consumers, everyday Joe, Joe Smith consumer doesn't know about a contestability period. And they may be thinking, they may be a little bit older or not in such great health, and they're giving up their whole life policy that they've had for years, or term to whole life policy that they've had for years, and they're getting a more expensive final expense policy, thinking, oh, okay, I'm going to get guaranteed coverage, and they don't know what's going to happen if they pass away within that contestable period. So it's a bad deal all the way across with that policy churning just to get more premiums. Um, Falsifying application information. This is really sticky business here. So if and by falsifying application information, I'm referring to perhaps their age, the income, their health information, to make sure that application will get accepted when otherwise it may not have been. This results in denied claims, bad reputation for the company, and could be bad faith lawsuits as well. We have to be careful here when we're distinguishing between an agent who is acting on behalf of the company and a broker who acts on behalf of the client. Because we have this thing called knowledge of the agent is knowledge of the principal. So if the person that's falsifying application information is acting as an agent of the insurance carrier. Whatever they knew at time of application, this person was in a wheelchair, this person was on oxygen, whatever they knew, the insurance company knew, regardless of the way the questions were answered on the application. And that creates denied claims and the possibility for lawsuits. So bad business there. Forged signatures are unauthorized changes. And it's changing beneficiaries or coverage amounts, etc. And usually it's going to something that's going to end up costing the policyholder more if they're making changes to the amounts or adding riders or things like that. And it also, they can change the beneficiary to maybe themselves or someone else they know, and the policyholder is totally unaware of what happened. And then this sliding, this was a totally new term for me. I really like this one. So sliding is when a producer adds extra coverage to a life insurance policy without the policyholder's knowledge. And it often is hiding that extra cost, and more money is being charged for their policy. So they're sliding in some benefits that you didn't know you had, and they're telling you, oh, okay, your premiums are going to be this X amount of dollars, and they end up being triple that amount or something like that. So they're sliding in some things on you. I like that term. Thought that was interesting. Okay, so now let's look at some red flags for this types of marketer fraud. Okay, so producers pressuring underwriters or policy process quickly issue the policy. This pressure thing gets done in all kinds of fraud cases, whether it's a beneficiary that is pressuring the company to hurry up and pay a claim because they know there's some fraudulent information on the application or in the medical records that's going to be discovered. Producers do this quite often to underwriters and claims processors and policy processors, get the policy out there. It's not unusual, and we do want to service our producers and get that out there so they can get their commission and sell the policies, because that's the bread and butter of the company. But we do want to, take our time, look and make sure things are in order. Suspicious client data. So if you have identical contact or payment information across unrelated policies, if you find that, you want to talk to someone about that. I'm a true crime aficionado, and for anybody else who watches true crime, you'll always hear the police or people in the community say, if you see something, say something. This would be one of those cases. If you see something, say something to the right people that can help you, dig down into this data and make sure that there's nothing nefarious going on. Also, if you see a high number of family and friends clients, especially if they share the same address and banking information, you see one or two or three uh, new producers that, they're just writing and writing and writing and writing, and all their family and friends, when you ask what their relationship to the applicant is, family and friends, you want to take a good look at that and see, are they making up these applications, a high volume of applications with errors or corrections that are written by the same producer or maybe a couple of producers. Applications with errors could be the just trying to slide it through the system, and see if they can get away with it. If you keep catching it and it's, you talk to the agent about the error, producer about the error, and, we're still seeing it, you may want to, um, take that into account when you're processing those applications. Producers with low persistency rates, high rates of cancellations, replacements, or lapses soon after policy issue, above average chargebacks. Companies keep track of the chargebacks, and if they got above average, well, what's wrong with the application? Why aren't the policies staying in force? Things like that. And then also another one to look at is producers paying the initial premiums for the applicant. Why are they doing that? This is a business transaction. Things should be straight. The consumer should be paying for their own premiums. Why would the producer pay the initial premiums? Okay, some red flags. And here's some more red flags. Unfortunately, there's quite a few of them. Clients reporting unexpected policy lapses despite having made payments. That's an issue and something that definitely should be paid attention to, something that should be investigated a little bit. Clients reporting that a producer refuses to give them a copy of their policy or delays sharing with them. Why would they do that? The policy belongs to the policy owner. They have their 30-day free look and they need to look at it and make sure that it's everything that they want it to be, and they need time to do that. So the producer should be getting those policies to the policyholders as soon as possible. Um, Clients that call in and they're unaware that they have a policy or they're unaware of the policy details. They are, don't know that they had all these extra benefits on the policy. They thought they had, just a straight life benefit, and they find out that they have, 3 or 4 additional riders, things like that. And that is a red flag, something you want to be aware of. Um, and then again, the producers paying the initial premiums themselves in order to secure the commission. It's important for them to get the commission, but it is also important to keep the business transaction clean and straight. Okay, so what can we do if we notice some of these red flags? So, quite a few things. So, before appointing your agents, you want to do a complete and thorough background check, include a criminal history, check references so that you can find out if this producer has, previously been in some trouble with other insurance companies. Do they have some good references? Do they have any regulatory actions that have been taken against them? Has their I don't know if you how you find this information, but possibly do they have their lawsuit filed against them or anything like that? And then run a credit report. Want to see how well they are doing financially. Um, Use state databases to validate licensing and continuing education status. We want to make sure that, they are educated, up to date on what the state statutes are and the fraud um, compliance that they have to go with. And, so you want to check that. Also, employ a segmented or a slightly different onboarding process for newly licensed producers or producers who have previous complaints. You want to dig down a little deeper in there and maybe do some additional training with them, things like that. I know to prevent agent fraud, insurers need a proactive and multi-layered approach. That includes prevention, detection, and enforcement. Most of the companies, I'm quite sure, are already doing these things on this slide. We just want to reiterate that it is important not to go extremely fast in this world of, do it now, get it done quickly, as fast as we can. We all want everything instantaneously. We want to get it on our phones and not have to do a whole lot. But as we do need to mitigate our exposure to fraud. So sometimes just slowing down a little bit. Okay. Companies can create conduct policies, like in their employee handbook, and perform ongoing training and oversight for their producers. So you can have a producer code of conduct manual with signed acknowledgments and, clearly outline how producers are to do each step of their process and, define what integrity is to the company and define what the consequences will be if the code of conduct is violated. Um, Mandatory fraud awareness training. I think most companies employ this. We do as reinsurers. We want to be aware of the fraud that's out there, and fraud is an ever evolving process. The minute we figure out one way to stop fraud, people who are engaged in fraud will find a new way in because some of them are making their living off of this, and it's quite a living at $308 billion per year. Use data analytics to flag outliers, i.e. producers with high lapse and cancellation rates and high instances of chargebacks. Um, Keep that information stored in your system somewhere and use those data goodness, analytics to help weed those bad, potentially bad players out. Conduct random quality assurance audits of new businesses on certain producers. If a producer is flagged as an outlier on your data analytics, go grab all of their new business applications and look and see what's going on with them. Do some persistency rate calculations and things like that, and see if any one or two persons' names float to the top. Um, that is potential area for some bad things going on. And you also want to make sure you track those customer complaints. The customer will let you know if the agent has done something wrong, whether, unfortunately, we hear stories about agents kind of bullying people into getting policies that they couldn't really afford, or, my dad say slick talking them into getting things that they can't afford or they didn't really understand what they were getting into. And customers will call and they'll talk about that. And you want to track that and make sure you know what producer is doing that action. And is it a group of producers, maybe at a whole agency? Just be careful. Again, we are here to take care of our clients, but we also want to take care of the company that we work for. All right. So Um, just want to take a pause here. We're about halfway through, and before we get into the case studies, to see if there are any questions.
So, there's a couple. The one I think we're gonna do is we're just gonna have you provide your sources.
Okay,
Um,
that I
oh,
have
sorry.
my sources.
For your on the final email on where you got your statistics
Yeah,
for the 350 billion. I think it's not just life insurance is what I'm assuming, that it's not just
no,
life
not
insurance.
just life insurance
It's
at
just
all.
fraud overall.
Yeah.
So that's why there's
Okay.
a lot
Yeah,
more zeros and higher numbers on that than just for life insurance.
I
And then
believe the slides on those slides with the statistics right at the bottom, and then at the end, I also cited my sources.
yeah, so when you get the PDF, you can look for where the statistics are for that.
Okay.
Um, and then so in the past, signatures, you could look at signatures that didn't match. Now everything's done digitally. What are
Mhm.
we doing to prevent that, or how are we trying to prevent fraud when everything is digitized now?
I think using your IT department to track IP addresses, do the multi-step authentication, things like that, putting that, if your clients have online access to those type of forms and can make those type of changes online, digital signatures, things like that, you want to also put into place your security protocols to do that type of thing. Like with your, banks are great at it. I can't just transfer $100,000 out of a savings account without doing some authentication. So you want to do that. And then if have someone regularly looking through your systems for suspicious activity. I know they're trained in it. I am no IT professional by any means, but I do know it is possible, like I said, to track the IP addresses, look at some suspicious login activity, things like that. Um, Digital signatures, it's hard to say whether they're going to match something because you're signing with the mouse or your finger or something like that. So you'll have to use those backdoor things in your system to see, does this make sense? I have an insured that lives in Texas, yet when they made this beneficiary change, they were all the way in Iowa, and then they made another change to their policy, and they were in California. Could they be traveling a lot? Yes. Um, could it be worth, making a phone call, taking a second step if this person floats up on your audit of your systems? Yeah, maybe.
Yeah, I mean, it sounds like it's also something that you kind of have to um the companies IT, and when they put their digital signatures in place, they have to have had these conversations with security companies and things like that as well. So it's mainly everybody's job just to like, okay. yeah, it looks good, but then all of a sudden this doesn't look right or this doesn't seem
Right.
right. I mean, that's when it's harder now. I mean, at least for myself. I mean,
Yeah. It's
because you
definitely
used to
harder.
you as an underwriter, you used to have to look at it and it's like, okay, there's the signature, here's the date, and it's like it looked like really shaky, and it's like, well, shaky now looks because they signed it with their finger. So I mean,
Right.
that's not the same. But if you have something that looks really weird or it doesn't say weird, it doesn't, it's like, oh. They say that they don't see the doctor, but then you've got codes or you've got something. You have to look for those other things. It's the things that we used to look at aren't there like they used to be. So I
Yes.
mean that's my own 2 cents with that as well.
Yeah, I don't think mm, any of us who are old school or I don't think are fans of these digital applications and beneficiary change forms and digital signatures. There sometimes you can't tell the agent signature from the insured signature from the policy owner signature. It all looks the same, you know, and then you get a beneficiary change form and that looks the same kind of, and it's tiny. I can't read it anyway, So I think you have to lean heavily on your IT department to put in some security protocols for you before accepting, that these things have been checked before we accept, maybe. Um, or keep it old school and have mail it to them and have them sign it and send it in, it depends on, what your company's tolerance is, and for the potential fraud, what and how they want to manage that risk.
And if you're a smaller company and you don't have those IT securities, you need to be a little bit extra special because people will target your companies to
Absolutely target
like, well,
you.
they're not going to check, so
Right. Oh,
you
they
have to
don't
do
check
the due
anything,
diligence.
and it's real easy. And we know hackers love to target an unsecure system and get in there and find out, all kinds of things. And if they can profit from it, and obviously, like I said, by that number of $306.8 billion, and that was at the end of 2021, I can only imagine how that number has changed. Um, that's a lot of money, and as Joe Q consumer, you and I are paying for that. And so I think it behooves us to take, a couple of extra steps. Like I said, I know and I understand the need for speed. We want our clients happy, and our, you know, American public is used to getting things almost instantaneously done now. I expect that sometimes, but it's okay to take a step back and, even if you have to explain to them, okay, we're trying to protect your interests as well as the companies, we don't want anything nefarious to take place. So we just have to take this extra step. I've always been one for wanting to get signatures notarized on a beneficiary change form. I could never talk a company into doing that. No, we're not going to make them go get it
Yeah,
notarized.
no, that's a claim thing. That's not going to be it.
Yeah,
They're not
well,
going to
I've
go for that
always
one at
been
all.
one for those.
Um,
Yeah.
Great presentation. Kindly confirm if you received or investigated any AI linked fraud. Appreciate if you could tell possibly scenarios on an AI generated fraud. Have we seen anything specifically yet
I have not specifically seen anything that I can relate
that you
directly
can
to AI.
pinpoint to?
Yeah, they can't pinpoint it to AI. Not yet. I'm still learning how to use AI in my own investigations. In another, we're going to have a part 4 of this series because there's so much to talk about. And Monica is going to be hosting that. We may get to some of that AI stuff because people use it to generate documents themselves, So I haven't been a part of any investigation that, can say directly, oh, this person used AI to create this signature or to create this person. But we do know there's a lot of synthetic identity things going on, long cons, policies being purchased on people who never existed, things like that. So it's out there, but no, I haven't personally put my hands on that.
Gotcha. Okay. Well, that's all we have for now.
All righty. So we'll move on with some case studies. I've got about 4 here for you. And um, again, we're not here to make any group decisions on any claims. We're just passing on the information. If you want to put any comments as we go through these case studies in the Q&A, Joe, you can bring them up when we get through with the facts of the case studies. If you have anything that you would like to share I'm all about it takes a village. I don't know everything. And most of us don't. We've all, everybody has a different day, been exposed to different things. So feel free. And so we'll get started with the beneficiary change. Um, so we have an insured. Sarah Smith is a 76-year-old female. She's a $200,000 policy that's been in force since 2001. The named beneficiary on the application is the insured's domestic partner, Sam. Okay. Now, shortly before the insured's death, a beneficiary change form was requested from a customer via phone, and she sounded kind of young, the female, but she claimed to be the insured. So, can't prove it. She says she's Sarah. Okay, so the change form was sent out to the address on file, and the completed form was received in the office about a week later. The beneficiary was changed to the insured sister. The beneficiary was supposed to be changed, I'm sorry, to the insured sister, Mary Smith. After comparison, the processor thought the signature on the change form just didn't match any of the other documents, and it was a hand signature. So she's looking for some things to match. The policy's old, 20 years old, and yeah, maybe the person's signature has changed, but this doesn't look the same at all. But most processors, customer service agents, they are not handwriting experts. So, but it's something that she took note of. It is also this carrier's policy that the beneficiary change will be processed upon receipt of the form, and the change will take place on the date the change form is signed by the policyholder. Okay, so continue on. So 2 days after the beneficiary change form was received, the insured died. The customer service department received a request to file a claim from both Mary, the insured sister, and from Sam, the insured's domestic partner. And each of them contended that they were the rightful beneficiary of the policy. Upon further investigation, the carrier discovered that the insured died from alcohol-induced dementia and had been hospitalized for the 3 months prior to her death. Okay, so these are the facts of the case, talking about them. So, what are the red flags in this case? There are quite a few. So, we'll go back, slide here. So, first red flag that I see was the phone call from the young sounding female claiming to be the insured. Sarah's 76. She could sound young, and it's all a matter of opinion, but it's something that a lot of people will take note of. Am I really talking to Sarah? And she says she's Sarah. Okay, so they make note of the phone call. The second red flag is the signatures don't match, and this is a hand signed document. And well, why aren't the signatures, at least kind of close? Well, it's again, policy application is old. It's the only thing I have to compare it to. And maybe Sarah's signature has changed a little bit, and but still, signature is not matching at all. Okay. And the third red flag was 2 days after the beneficiary change was submitted, form was received, the insured died. Wow. Why so close? Most people, when they are sick or they know they're getting sick, they'll get their affairs in order. It's usually not just a couple days before they pass. And then the competing beneficiaries. It's a huge red flag. That's a full stop for a claims examiner, is what's going on? What happened here? So that'll require some deep investigation into that beneficiary change form. And then when you see that the final and probably most glaring red flag was that this particular insured had been had died from alcohol-induced dementia. Uh, that's not something that presents itself overnight. And she had been hospitalized in the hospital for 3 months prior to her death. So it means she wasn't functional enough to be at her home. So what was her mental status? What was going on? Was she able to understand the change of beneficiary form if she signed it? So those are the red flags I see. Any comments from anybody? I can't see the Q&A box, Jill, if there's anything there.
Nope.
Okay. All right. So next thing is action steps, or what would you do? So, uh, I would definitely recommend um, looking further into this beneficiary change form, consulting with your legal department. What can we do? Yeah, how can we find out if this was forged? Do we want to ask a handwriting expert, or do we want to write to the doctor and see if this person was capable of signing and understanding a beneficiary change form just a couple weeks before her death? Um, you know, I could she have signed that while she was in the hospital? Things like that. So those are some action steps you want to take. Again, just do some additional investigation. Claims examiners are brilliant at doing this. We want to know the answer to everything, and we want everything to be in place and correct. But you know, we some investigation is definitely warranted here. Any comments before I move on, Jill?
Nope.
Okay. Alrighty. Then getting on. So this one may sound familiar to a few of you out there today. It's employee friend or fraud, and I thought this was a great case because this has both some agent stuff in it and a beneficiary issue. So, simplified issue, electronic application, our favorite kind in Missouri. We have a 41-year-old male, key person. Policy was taken out on this insured by his employer. Face amounts $400,000. The occupation on the application is shown as a sales manager for an investment office. The annual salary is $80,000. The insured's employer was the writing agent, policy owner, payer, and beneficiary of the policy. Like a quadruple whammy there. Okay, the insured died outside of the contestable period. The beneficiary or writing agent files a claim. The claimant statement notes that the beneficiary's relationship to the insured is a friend. Okay, so we have a key person policy on a friend now. The death certificate notes the insured's occupation as a water treatment tech, working for Leaking Faucet County Water District. Okay, so was he a water treatment tech that got into sales management? Was he a part of this business? You know, not. So we do the claim investigation. So additional underwriting information regarding the business relationship between the insured and the beneficiary was requested. Exactly, they wrote to the beneficiary and said, exactly what is your relationship? The agent statement received with the application noted the following about the insured's business relationship with the beneficiary: that he conducted ongoing responsibilities that were an essential part of the business. That's why they had to have a key person policy. He had a specific skill set that took many years to achieve, and that the insured's death would cause disruption to the business. Okay. Had the agent applied for a higher face amount, financials would have been requested. Because, okay, he's making $80,000 a year, but he's a partner in the business. And is that correct for this business? That, a partner in the business would be making just $80,000 a year, or is the business bigger or smaller than that? What do we know? So financials weren't requested at underwriting, so we don't know at claim time. The claim department at FWB Insurance Company referred this file to their SIU for investigation of the possible fraud in the application of the policy. So, I'm sorry. So, what are the red flags here? Well, going back to this first one, I know the red flag for me was the employer, writing agent, policy owner, payer, and beneficiary were all the same person. Wow, that's a lot. And then this key person policy, you're taking a policy saying that if this person dies, my business will go under, but he's a water treatment tech. Yeah, okay, it's possible he could have gotten into the business with you, but if he did, is he new to it? Because not on the death certificate didn't say anything about, and usually the family is reporting that information. Didn't say anything about being a sales manager. It's a little suspicious. Um, and then how much was the business worth, and why only a $400,000 policy? 400,000 usually won't save a business if it's going to go under. So, why only that $400,000 policy? And was it just because we wouldn't request financials? Is this agent doing anything fraudulent? Don't know. Not I. You know, the decision that the company made on this policy. I don't even remember, but I know this. We did a lot of investigating and digging down in this policy and trying to figure out what exactly is going on here. So any questions or comments about this particular?
No.
No.
Mm.
Okay. Moving on. All right. So marketer fraud. So Mary, she works in the billing department at ABC Life Insurance. Part of Mary's job, she's an auditor, and part of Mary's job is to go over the billing invoices for each month for quality assurance, making sure we have correct credit card numbers, that the money is coming out properly, nothing's being charged back, so on and so forth. So Mary is a very astute auditor, and she notices that one credit card number is being repeatedly charged for premiums on several policies on what seems to be unrelated people. It's not a family group or anything like that. There's a different insured owner on each policy. All of the policies were issued in one of three neighboring states, but none of the addresses are the same. So, suspecting something's wrong, Mary pulls the applications for each of the policies to review the contact information and payment authorization form. Mary notices that there's one writing agent on all of the affected policies. Okay, so what are the red flags and what should we do? So, red flags, why is this one credit card being charged for all of these seemingly unrelated policies? And these policies, they're written across three states. So, why is there only, there's one agent involved? So, what should Mary do? Um, any questions, comments here on what Mary should do?
No.
Okay. Well,
I think she needs to call her SIU and
I believe so too. Um, or at minimum, she definitely needs, yes, she needs to contact the SIU, maybe even her licensing department, and find out more about this agent. What is he up to? And, possibly contacting the policy owners or insurers on these policies and saying, hey, is this your credit card? Um, is this the credit card that you gave us, that you intend for us to be using to deduct premiums? Because sometimes, there are some people out there lucky enough not to really care about the charges on their credit card, or they don't look very often. And sometimes people just don't know what's happening on their credit card for months. And the last thing you want to do is get an angry client on the phone saying, hey, I've got all these charges on here, and I only have one policy with you, and what's going on? So talk about damaging to the um, direct carrier's reputation. Now you're not guarding the safety of my personal information, my financial information. That could cause a lot of problems, up to and including lawsuits. So you want to be really careful about that. Very good on Mary to catch that. In this case, this agent, I was a part of this case. This agent was taking one client's legitimately used credit card and churning um, on some fake policies to create commissions. And by the time the company caught him, unfortunately, they were unable to even locate him, and they tried suing his, I believe it's called E&O insurance, and none of that took place. So the company took a pretty good hit to their reputation and also financial loss because of this agent.
so normally, I mean, I don't think that it's legal. Maybe it's not legal, but it's very unethical for the
Mhm.
agent to pay the premium, any premiums, let alone the initial premium. But is it more of a legal thing? I mean, you guys in the claims department have a lot more knowledge on the legal side of
Yeah.
it.
Well, in this particular case, this agent had used a client, a previous client's credit card on all these other policies. Um, And it just so happened that Mary had her eyes open and caught it. That, hey, I keep seeing the same credit card number. And this person's got a lot of policies. And then, okay, well, these policies don't even look related, So she did some digging and found out. But I don't think that it's illegal for a producer to use his own credit cards for the initial premium payment. I do think it's highly unethical. Again, it blurs the lines of business. Even if, I guess in the case that the person that you're writing the policy on and you're going to be the policy owner and maybe it's your wife that you're writing
Um,
the policy on, it might be okay for that. But
yeah, I've never worked at a company where um, they allow the agents to pay.
I think you would
That's
be,
just asking for trouble.
yeah,
It's
that leaves
not
you
legal for
wide open
agents to
for
pay
fraud.
premiums for a policy, initial premium or anytime. Yeah, I don't think um, it's, yeah, it's the question of the rebating, like,
Yes,
it's like, oh, you pay, I'll pay it and then I'll give you a portion of it back, like a discount or whatever.
right. All unethical.
Yeah, a
Leaves
producer
you
has
wide
to
open for
provide support
fraud.
when paying premium on behalf of the client where they may have received cash, they can't pay it for them. So, I mean, they have to, yeah,
Yeah, I mean, when you're applying for or purchasing any product, the consumer knows you have to make a way to be able to purchase it, whether it's writing a check or you have to have a bank account or you got to go get a,
yeah,
Walmart debit card, whatever it is you have to do, you
yeah.
have to be able to make that payment.
Most insurance companies I know, they don't allow it. They just don't. And that's the way it should be because
Yep,
it's just asking for trouble. So,
highly agree
but
with
yeah,
that. Yeah, you're
cause a
asking.
little conversation there, Michelle.
Huh?
I said you had a little conversation going on with several people there.
Oh, okay, good, good, good. Yeah, because these are the things that worry us, as a reinsurer, we don't see the application. We have no idea what's going on with the premiums or anything like that. And until it gets to claim time, and at claim time, we are really stuck on some rules, uh, as far as what we can and can't do, whether we can deny benefits, whether we can even assert that there was fraud. We have to have a lot of proof, and it's difficult to get. So, speaking to my underwriters in the audience, it's lovely if underwriters, customer service agents, wherever you work, policy processing, like I said, each of us has a part to play in being a human fraud detector. Any other comments? No? Okay, I'll move on. Okay. So this is again, I was kind of taken with this term sliding. So sliding in the extra benefits. Sasha Fitzgerald applied for and was accepted for a 10-year term policy with no riders within your best insurance company. She signed and dated a payment authorization form for her monthly premium of $45. When the policy was delivered, Sasha did, unlike most people, she did actually look at it. And she noticed that there were some additional benefits on the policy that the agent hadn't mentioned to her. Well, Sasha was delighted. She was like, okay, I got these free additional benefits, and I'm only having to pay $45 for it. What Sasha didn't do, mistake she made, was not read the policy specification page where, lists out where your premiums are going to, exactly what you're paying for. Sasha was one of those kind of folks that I mentioned that, not real concerned about looking at her credit card statements every month. So it took her a little while before she noticed that there had been three deductions for $98, three monthly deductions from your best interest life insurance company. So stunned, Sasha made an angry call to the insurance company's customer service department. Now, the implications of this are really kind of scary for the client. There could be market conduct, things going on, like what are you doing to your clients? Why are you adding on all these benefits and the clients didn't know about it? Like that whole blow up with the big bank. Quite a few years ago that happened, where people they had things they didn't know anything about. And then Sasha is paying for them, and under the impression that she shouldn't have to. Yes, Sasha should read her policy, but if any of you have ever sat down with your legal department, you know that's not always the case. People don't read their policy, and you can't always hold that against them. So again, the implications for the client is that, she could have been out a lot of money. She's angry and upset that there are things on her policy she knew nothing about. And it's, the agent was motivated to do this to her simply by commissions, getting a few extra commissions. And if you multiply Sasha Fitzgerald times 100 clients, what do you have out there? So again, you want to do if you have a customer who puts you on notice that, hey, there's something going on here, you want to take a look into that producer's business and see what's going on with it. And are the clients aware of what is on their policy and why it costs them what it does? I see we have a comment. I can't see it. No.
Sorry, no, we do. You stated that it's not legal for agents to pay premiums for policy. I don't think she said it was not legal. She just said it's not ethical. Um, Initial
Yeah.
premium at any time. However, if an agent is getting an insurance policy for an immediate family member, yeah, he can of course pay for that. That's not anything. And it's generally like someone before had said, compliance. Most
Right.
compliance officers don't want you to. It's just not it's a slippery slope, so don't do it.
Yeah, and wanting to keep the transactions clean. Yeah, no, I did. Yeah, not illegal, unethical.
And
and
it's
it
it's
leaves the
it's just
company
opening the door for fraud.
for fraud, just opening it wide open for them. I mean, maybe you could make an exception for husband, wife, because they
Oh,
share
yeah, I
family.
mean, as long as they're related, that's fine.
Yeah,
But it's like, but we're not talking, oh, well, I pay for my niece or I pay for my nephew or my
my
aunt or
neighbor
something.
or,
Unless they're like, they're legally, the niece and nephew are their legal dependents or something. But you'd have to ask those questions. You shouldn't really just accept always
no,
because those are
definitely need
those
to
are the ones
question.
that, it's like
Yeah,
it might be okay, but it might not. So it's better just to question. But
yeah,
it's not about this case, Michelle.
okay. Um, so no more questions about this right
Okay.
here.
The chat, it states not legal, but I do understand now what you mean ethical. Thank you. And yeah, it would be a rebating type concern.
Absolutely. Okay. Anything else about Sarah Fitzgerald and the sliding
No,
in of the extra benefits? No.
no.
All righty. Well, that concludes our case studies. And I give you back a little bit of extra time. We're in a little early here, but I have some conclusions and takeaways. So, first of all, assume nothing. You know, uh, don't assume that since the policy is 20 years old, that the signature should look different. Do a little bit of investigating if you can. I understand the companies need to do things quickly for their customer, get things done, and we all have a lot of work to do, and we don't want it sitting around too long. But don't assume anything. If you feel like you need to investigate something, by all means, trust your gut and investigate. Education, education, education. Optimum Re is all about education. We have it all over our website, and we do these webinars because things are rapidly changing in the world, and in the world of fraud, things change so rapidly you can barely keep up. AI is put a whole new monkey wrench into the thing. So educate employees, give them that fraud training, and make sure that you're up on the newest fraud schemes and things like that. Um, uh, like I said, we'll be coming back with a part 4. Monica will be doing that sometime in July because there is so much content for us that we can't, we want to be respectful of your time and keep it down, but there's so much content to share. So educate, and, the industry meetings and the webinars, at the ICA they have fraud sessions after fraud sessions. and it's the people who are actually going out there, boots on the ground, investigating the fraud that are, hosting these sessions. And there was so much information given to me in one session that I just couldn't even take it all in. But it's amazing what people are doing as far as fraud. Remember that it takes a village. Like I said, if you see something, say something. It does take a village from beginning to end of the life insurance process, application, all the way through claims payment, and everybody who touched it in between. There is potential to detect fraud. If you see something, say something, ask somebody, take it to them. Does this look funny to you? It only takes a few minutes to do that. We don't want to hold up things, but we do want to make sure that we have good business on the books. Um, so, also use your reinsurance partners. Optimum Re, we are so client focused. We are here for you. We'll walk through any process with you. We'll do research. Um, we'll get down into the dirty with you to, help you figure out what you have in front of you. Are there any best practices that you can employ? Things like that. So best practices for dealing with fraud, again, outsource the investigation to experts in the field. There are companies that do these investigations every day, and they know so much more than we could possibly know because they are boots on the ground dealing with it every day, looking at all these fraudulent claims and, actually proving that it's fraud. And then your legal department, use them. What can we do legally without getting in trouble, especially at claim time? You want to, walk hand in hand with your legal department. All right. And that is
I
114.
I have, there's a client, regarding, the slide, it says the client could submit a complaint to the company and the state insurance commission that the agent did not disclose the costs of the policy because he did not go over the policy pages with there before she signed the contract. And that's true of anything. I mean,
Oh,
clients
yeah.
complain when they've been given everything and they still don't like what they're giving, but just this particular one was talking about a fraudulent thing. But yeah, there are some very valid reasons why the client can complain because,
Right.
they didn't pay attention or the agent didn't do his job. He
Right.
didn't do
And
what he was
then
supposed to do.
the impact that has on the carrier can be very significant, because if you get enough DOI complaints, they'll, may instigate a market conduct survey and start looking at everything that the company is doing. And um, so, being on the front lines, like I said, from beginning to end, catching those things before a client has to make a Department of Insurance complaint, or, paying attention to that client when they call and say, hey, I didn't know anything about this. And then, maybe go back and taking a look at all of that producer's business, see what we have there. Sorry. Um, See what you have, or do we have a trend going on? Looking for trends, uh, I totally 100% agree. It does leave you wide open for complaints and regulation, fines, things like that. The company, and we want to find those people who are committing this type of crime.
And the thing of it is like this it takes everybody, like she says. I mean, I know underwriters enjoy these types of things because we don't always know everything. It's like, and all the tricks to and we don't get down and dirty as much as the claims person, or we don't just we are not the investigators. We are to some extent, but we don't get quite much into the weeds. Otherwise, we'd never issue anything.
Right,
Um,
right.
but that's not our job. Their job is to get a little deeper, and ours is just to try to prevent it. But I know several times it's like, okay, you see an agent always clean cheating. So it's like, and underwriters always know,
Mhm.
certain agents or certain areas of where you're always getting the same records, and it's always from the same doctor. So we see patterns, and it's just our job to kind of bring that to the forefront and try to prevent it going to a claim. Um, is there any more questions?
Well,
I do want to thank Michelle. She did a wonderful job.
thank
There is
you.
going to
Thank
be
you,
a
Giselle.
survey afterwards. Like she said, there is going to be um, a fourth increment of this with Monica in July. We will have another webinar in June, so look for that coming out. This webinar is also going to be, a link will go out to all of you and with a copy of it, but it will also be on our website. So make sure you check out our website, optimumre.com, and join us on LinkedIn, because that also will show any of our webinars, our podcasts, anything like that. And we really, really appreciate you. Sorry about the mix up this morning. But thank you, Michelle. You're getting kudos online, and
Well, thank you
thanks
very much.
everyone.
I appreciate it. I appreciate it. Love having these talks and sharing, and sharing the information. I'm so appreciative of all of you who joined.
All right, thanks guys. Bye.
Thank you. Bye-bye.